So what have been our learnings as a company or as a group raising money on some of in Europe and in the Western markets? First of all is structure. People want simple tax efficient structures. And that's something which a lot of companies coming out of Asia do find challenging, as simple as it might seem sitting here in London. But it is challenging because of not so much what's in Europe, because of the regimes that they are in. Exchange control being one, there's various other taxation regimes. So this is one thing which is very important. The other is disintermediation. One thing the investors don't like is fees on fees. And layering of one manager on top of the other is something that investors today that's the one thing that they want to get away from. So disintermediation, they want to invest in the company which is doing the job. They don't mind paying whatever the valuation or the promote structures that they may be in there, but they don't want 2 layers or 3 layers of managers in between. In terms of product, a clarity of what is the value proposition, what is the product, what is the strategy is very important. Also, one thing which we found is that the track record of the management, their referenceability, and any prior experience that they may have in creating exits is paramount. Because when people are investing thousands of miles away, referenceability and the previous experience of the management teams are very important. On timing, I already said this before. There are times when the best products don't get funded, and there are times when substandard products get funded. So, we've raised money when you can. There are waves where Asia, India, China becomes flavor of the day. That's the time to raise money. When the money gets pulled out, you can have the best product, it doesn't get funded. Generally speaking, when people are investing that far afield, as far as Asia, startups are not preferred. People prefer someone else, the entrepreneur, the company, the group, which is bringing that product to market to Europe, has already taken that initial risk capital, has taken the risk, and then brought a slightly more matured product to the market. Couldn't say enough about corporate governance. With all the press and news that one sees on corruption and on ethical trade practices, I think the greater that the Asian companies, this has been our learning, the greater amount of transparency, governance, and reporting standards that Asian companies can put into it, the more the confidence the investors would have. And what have we heard back from some of our investors who happen to be pension funds, who happen to be insurance companies, sovereign wealth funds alike? Well, the thing on tax structures, yes, they definitely look for that. But one very important fact on structure is that people like to invest in companies which control their destiny, which control their execution, and not only looking at pure asset allocators, passive investors. So this has been a shift on the disintermediation side, where the old way of investing was primarily to managers, and then the managers would put money. What's been a big move, both from the pension community as well as from the sovereigns, is to move into direct investments into people who actually control the development and operations of whatever businesses that they may be. And investors like to link management incentives on cash realization, not on NAV markups anymore. And I think that's a reality that, which is very important we have to live with. In terms of product, I think while startups are not preferred, but in Asian countries, the value of assets and companies can get ramped up very, very quickly, even at a relatively less matured level. So entering at a point where low or no premium is paid is something that investors prefer these days. Also, smaller niche businesses or investment strategies have worked better than some of the big ideas. And that's definitely over the last 5 to 10 years that's proven. Management teams with local expertise are definitely preferred than management teams with international expertise, because something that works in London may not work in Beijing or in Mumbai. Uh, Focus is a very important aspect, because lots of people want to do world domination, do a bit of everything. But I think focus is very important. Uh, Asian economies are hot, they're developing well, yet they are what they are. They are emerging markets. Lots of things within those markets haven't settled down yet. The rules of the game are still being written. Focus is important, otherwise, accidents can happen. And last and not the least, what I've heard from a number of investors is that their teams tend to overanalyze. Uh, the famous analysis paralysis tends to happen. People who want to go to Asia, it is going to be a leap of faith, because it is an emerging market at the moment.